Welcome to another S&P 500 analysis. Today is August 25th, 2021. And there is no surprise to anyone, absolutely no surprise, that the S&P 500 made another all-time high. In this video, we're going to talk about how we knew that the S&P 500 was going to make another new all-time high. So stay tuned. Now, let me start off with the tweet that I tweeted out last night or early this morning. This is 1:05 a.m. Pacific time, so it's about 4 o'clock Eastern time, right? So I post this market profile chart. I said, watch the poor high, okay? The poor high that was formed here, and also the Globex all-time high that was put in on the 24th of August. I said, if the ES come up and tag this all-time high, and we will see the S&P 500 likely to make another new all-time high. With these poor high and the all-time high put in by the Globex is a very strong indication that we're going to see another new high from the S&P 500. Now, I also say do not ask when, because no one has a crystal ball to tell us exactly when the S&P 500 or the E-mini S&P 500 futures will come up and put in another all-time high. Now let's take a look at today's market profile for the ES, the E-mini S&P 500. As you can see, here's the poor high that we're referring to from the tweet that I tweeted out last night. Okay, and you can see that the E-mini came up and tagged this and took this out. And also here's the Globex all-time high at 44.92 and also came up and took this out. So this price action have pushed the S&P 500 into a new all-time high. Now here what it did today. Today it also left some of these single prints. Okay, so these single print will likely get filled. Now let's quickly run down the market sentiment and the market internal and see what are those things telling us about the strength or the weakness of the market. You can see from this daily chart of the S&P 500, we see that today it closed up almost 10 points or 0.22%. And the VIX came back down from, remember last week, we saw it came up and move inside above the 20 level. And you can see that it immediately pulled back and dropped down to the 16.79 today. It closed at 16.79. So once again, the market participant are feeling very complacent once again. And also the put call ratio, not as many put is being bought now. Remember way up here, it got above the 0.75. So showing that the market participant are taking some risk off and even putting on some hedges, by buying some put to protect some position. So right now it is back down to risk on and it's sitting at 0.51. Now here we are looking at the up-down volume ratio. Today the S&P 500 put in a new all-time high and closed with a new all-time closing high. But the up-down volume ratio is not that strong. It's only 1.3 times more up volume than down volume. Now the previous day, like yesterday, it was actually up at 4.3. So there were 4.3 times more up volume than down volume. And also looking at the advanced decline, yesterday the advanced led the decliner by 1,248. And today it only led by 611. So definitely, although it is positive, but it's showing a little bit less strength on today's price action of pushing the S&P 500 to a new all-time high and close with a new all-time closing high. Although yesterday it did the same thing. It put in a new all-time high and closed with a new all-time closing high, but with a little bit more strength than today. Now in this chart, we see that the New York Stock Exchange new 52-week high, 52-week low, that there were 141 new 52-week high versus 38 new 52-week low. So the net difference is 103 more new 52-week high than 52-week low. So that is a slight improvement from the previous day, but again, it is not something that show us there are a lot of new high to support this S&P 500 new high. Because normally, if you see a broad market participation that pushing the index up to a new high, you will see at least 800 to 1,000 of new 52-week high over 52-week low. Okay, so right now we are only seeing 100 or so of a new 52-week high. So that is nothing comparing to what it needs to be. Because again, you have to be aware that there are over 3,000 stocks traded in the New York Stock Exchange every day. So right now, when you are talking about a S&P 500 that is making new all-time closing high, and you're only seeing 141 of those 3,000 stocks is making new 52-week high. So that is not a sign of broad market participation. And in this cumulative advanced decline line here, the AD line for the New York Stock Exchange, we see that it is improving. It is coming up, but it's still, there is the slight divergence. It's been going down while the index, the S&P 500 is going higher by making a new all-time high, essentially a higher high, while this right here is making lower high. So until this come up and take out this pivot here, then we still be looking at a negative divergence between the advanced decline line and the S&P 500, and that is negative. And here we are looking at the Nasdaq 100. The Nasdaq 100, as you can see, it got a little bit of a spinning top, although it's a little bit of a bearish candle, but it did close up with a gain of 11 point or 0.07%. The up volume, so it's almost 2 to 1 favor the up volume. 560 more advancing issue than declining issue. So that is a positive, although we are seeing a getting weaker. You could see that yesterday there were 1,282 more advancing issue than declining issue, and on Monday there were 2,089 more advancing issue than declining issue. So although we are seeing positive, but the strength is getting less and less. And here looking at the Nasdaq new 52-week high versus 52-week low, we're only seeing 99 more 52-week high than 52-week low. There were 169 new 52-week high today in the Nasdaq market, but there were 70 new lows. So again, when a index is closing at a new high, thousands of stocks traded in the Nasdaq market, you're only seeing 169 of them making new 52-week high. That is pathetic in terms of strength or in terms of market participation. And for the cumulative AD line for the Nasdaq market, as you can see, we are still seeing this negative divergence between the Nasdaq 100 and the cumulative AD line. Be cautious, especially in the Nasdaq market. So for those of you that are not following me on Twitter, you might want to consider give it a follow, because I do post ideas throughout the week on my Twitter stream, such as here I posted something about Tesla on some of these price zones that I'm watching, and also some of the cannabis stock, some of the maybe some idea that might be useful to you. And also got GameStop here that I also tweeted out and kind of give a little idea on some of the price level to keep an eye on. So give it a follow. The the handle is at smtraderCA. That stands for Stock Market Trader from California. Now let's take a look at the SPY, the ETF for the S&P 500. Remember in the last video, I was talking about this zone here. It basically was talking about this balance zone. And it broke out on Friday, and we're basically looking for a look above and fail if that happened to retrace back down here to possibly 436. Or if it come up here, because we also have some single print from the E-mini S&P 500 futures, right, that tell us that there is a possibility that we could see a higher level from the S&P 500 when the ES, the futures, come up and fill the single print. then we're also saying that if it take out this 1x, range extension, then we're basically looking for 2x. So right now, as you can see, it came up and took out the, essentially filled this gap here and came up and took out this 1x extension. Now we are looking at the possibility of a 2x range extension, and that will put it up at 452.75. Now that might be a little bit high for now, though there is a 1618 or close to 150% or 1.5 extension from this range here. Okay, basically the range, the swing of this balance area. So that would put it up at 450.64. Okay, so keep an eye on that, and also it could be a little bit of a confluence if you just kind of hug against this trend line here, to make itself up to this 450.64. So you could get a little bit of a confluence between that 1618 extension level and the this trend line here. Okay, so now also the other thing is, remember we said earlier that we have a clean high from the E-mini S&P 500 future. That does not tell us to expect a higher high from the S&P 500 unless we get another new message from the S&P 500 future or from the market essentially to let us know that there could be another all-time high coming. Then we would anticipate some sort of pullback now, right? Maybe it will come back in and now come back and retest these level here. Essentially, this right here is more of a support than resistance level. So we could be looking a near-term retest of possibly somewhere around 447 for the SPY. Okay, so look for those type of level there if we see a little bit of a pullback in the near term. Now, how much a pullback after that? Then, well, we're basically just going to wait and see. It could also be pulling back down into this point of control here, right? Because there is a composite value area high at 444. So it could come back into this area, into this composite value area, which is this aqua color shaded area here. But for now, we're basically just going to keep an eye on the 447.21 area and also the possibility of pushing up to the 450 area for the SPY. Now let's take a look at the daily chart of the S&P 500. As you can see on this daily chart, we saw this range here. Remember this range? I basically have double up the extension here to a 2x, and also I put in a 1618. So you can see that the 2x extension is 4544.89. In addition, I also moved the Fibonacci retracement. So right now I have a place at this particular swing now. And as you can see that it pulled back inside of this retracement zone. It did not get down to the 50% level, but it did get below the 618. Then we got a nice bounce up. And right now, if we take a look at the 127 extension, that will place it the potential target level around 46.98. And that is in confluence, close proximity to the 2x range extension from this this balance area that we have here. And that would put it here at 44.89. So right now, what we basically are looking at is the possibility of a pullback. Remember, again, we're referring back to the E-mini S&P 500. We do not have any market message to tell us to focus on another new all-time high. Then we basically need to focus on the pullback action because of some single print, some of those point of control and poor low below the current level that need to get resolved. So until the market give us a message, otherwise we will be keeping an eye on a possible pullback. And if that's the case, then we could see it. The first level that I'll be looking at is come back into this level somewhere around 4429.97 or essentially 4430. Then see, is it going to get back into this balance area here, okay, and double check the 618 level. And if it come back in, maybe this is not the pivot high to do this Fibonacci retracement. Maybe this is the pivot high. Maybe we place it here then when it's on this pullback, it might pull back down to the 50% level before we get a bounce back up into a new all-time high once again. But who knows, right? Right now, we are basically just kind of monitoring the price action to see would it be able to pull back. And if it decide to pull back, then this is the level to keep an eye on, 44.30 area. Okay, but if it decide to continue to push on, then here again, the first one is 4,523. Then the next one is 4,545. So those are the level to keep an eye on the SP 500 based on the price action up or down. And here's the Nasdaq 100. As you can see, it penetrated above the 1618. So we're basically looking at this upward trend line here to see what it come up to get up to this 15,600. But again, if we are looking at some sort of pullback, we're essentially looking for it to come back down to possibly to this trend line here. All right, last time we were looking at the possibility of in confluence with this 14,600 area, which is in confluence with this 127 extension. But right now, we essentially are looking at this possibility of this confluence with the 141 extension that will be 14,850. So somewhere around here, 14,800 area, see if it pull back into this trend line here, and that would be in confluence in this area here. But on the upside, like I said, they'll look for this upper trend line. And for the Russell 2000, we already got some bounce from the Russell 2000. Remember, we were talking about this balance area, right? Looking for a bounce. If it get a bounce up here, then we'd be looking to see would it be able to take out this 2297. And if it could take out this 2297 and break above this balance area, then we could be keeping an eye on the possibility of the Russell 2000 come up and test its old high and possibly put in a new all-time high. So right now it is doing pretty good. It's coming back up. So we'll see would it be able to sustain itself on the uptrend and come up and take out this 2297, or would it just kind of reverse back down and come back below this 2195? And if it does, then keep an eye on these lower level here, for potential tests of support once again. And for the Dow Jones Transportation, it is still struggling to try to get above this 15,000. Although it is trying to come up right now, it is testing this declining trend line here. So we're going to see would it be able to break above this trend line and come up and take out this 15,000 area. If it reverses back down, then we essentially are looking at this 14,242. And here looking at the Dow Jones Industrial, notice that Dow Jones Industrial did not make a new all-time high or close anywhere close to its all-time closing high up here. So right now, it seems like the Dow Jones Industrial is a little bit underperformed comparing to the S&P 500. So we're going to see if any kind of weakness come in, a pullback on the S&P 500, where we see more weakness from the Dow Jones Industrial and come back in to this balance area and essentially have a look above and fail type of a move to come back down into this under this 34,000 area. So keep an eye on that. Or the on the upside is essentially a look for it to try to come up and take out its all-time closing high and put in a new closing high and possibly a new all-time high. And just to put in some perspective here, this is the New York Stock Exchange Composite Index. This is more of a broader index. It covers all the stock, the 3,000 plus stock that's traded on the New York Stock Exchange. You can see today it did not put in a new all-time high or close with a new closing high. The all-time closing high is up here at 16,075.09, and today it closed at 16,812.84. So there's another 60 some odd points away. So we'll see would it be able to come up and put in a new closing high in the coming day, or would it reverse back, come down and dip below the 16,708 and work itself back down for this level here or this trend line. Essentially, this is the lower trend line of the price channel somewhere around 15,775. So the first level to keep an eye on is 16,708, and then on the upside is 16,875. All right, looking at this 10-year yield chart here, you can see that the yield came back up to 1.34% here. So it seems like it is inching its way up to this 1.4. Gotta keep an eye on the yield. And I believe Jay Powell will be speaking tomorrow or Friday in the Jackson Hole virtual conference there. Just keep an eye on this 10-year yield. Most likely we might see a little bit uptick toward that 14 or that 1.4 level in the coming days. The dollar is coming down a bit in the last couple of days, so we kind of keep an eye on that. Remember, we were saying that once the dollar get up to these 94 level, that might be a little bit too strong, and we might see the Fed trying to do a little bit of a dance and try to get the dollar back down to a lower level. So here we see crude oil price came up as the dollar went down. So that kind of give us an indication that it is still following the dollar, not the supply and demand equation yet. And finally, here's gold. Gold is still kind of hovering at this 1804 level. It's a little bit of an evening star type of a candle formation, and that typically is a bearish type of a candle formation. So we'll see. Maybe it come down and test this trend line, and then maybe we'll work back down into this zone here at the 1716 and 1677 area, because I am still looking for a retest of this zone here. Basically put in some sort of double bottom like this, but right now it seems like it's a little bit too high of a double bottom peak here. So that might be a little bit of a different price action that I'd be looking at, and maybe we'd be looking at some sort of a balance area like this, right? This would be a nice play here. Then come up to this 1923 level, which was one of the level that we did look at a while back here, right? Basically come up. So we'll see. Be sure to smash that thumbs up to help me promote and share this video. And if you are not a subscriber or new to this channel, click on that subscribe and also click on that notification icon. That will really help me grow this channel. Thank you for watching and stay safe.